So good morning, everyone. Thank you for being here today. I truly, truly do appreciate it. I know there's probably more fun things that you'd like to be doing on a Saturday morning than sitting in a webinar, but I do appreciate you being here, and thank you very much for taking the time. So today we're going to talk about Heikin Ashi candles. Now, Heikin Ashi is something that there's a lot of confusion, I think, around Heikin Ashi, and there's all kinds of information out there, like they're the greatest thing since sliced bread, and then there's folks out there that just absolutely hate them. I'm kind of somewhere in the middle there on Heikin Ashi, and I found several ways that I can make them be really, really useful for me. Okay. And so when we take a look at these Heikin Ashi candles, we have to understand how they're created. The class this morning is on Heikin Ashi candles, not particularly on options. However, if you're looking for information on options and things like that, if you go to my YouTube channel, and I'm going to ask everyone to do this for me if you don't mind, if you would go to my YouTube channel, click on the subscribe button, and then also there'll be a little pop-up when you click on the subscribe button, click on the bell, and that way you'll get notified every time I post one of these videos. And you know, I'm always posting free information on the site. Okay, just tons and tons of free information there. So if you're looking for something specifically geared to options, you will find some of that on the YouTube channel. And also, we do that every single day in Right Way Options. We talk 2 hours every day in a live room on option trading and setups and everything along that like that. So this is not a specific option class this morning. It's to be talking about Heikin Ashi candles. Now you can certainly use them for options, and I will tell you how I use them for options as we go along. Okay. So Heikin Ashi, what's the deal with them? Well, they're really pretty darn simple. But it kind of messes people up when you look at them, because everyone is really used to the candlesticks. Heikin Ashi actually means, if you look it up in Japanese, Heikin means average and Ashi means pace. So what it is a candle that is actually created to average price action, to cut the noise out of a chart, to reduce all of that noise that often causes traders an awful lot of trouble. So it originated in Japan, and they're very, very similar. They look basically identical to a regular candlestick, but there are some differences to be noted, because they really help you see trend in a much better, a much cleaner way than a standard candlestick. And the main difference between the Heikin Ashi and a regular candlestick chart is that they're an average. They're an average of 2 trading days, or 2 periods, I should say, 2 periods put together to provide a smoothing effect to the chart. It smooths everything out. What you'll notice in a Heikin Ashi chart is there is no gaps, and there never will be a gap in a Heikin Ashi chart by the way they are calculated. So one of the things that I think is I kind of put together a couple slides here. By the way, there's just a few slides, and we're going to move through those pretty quick, and we're just going to jump into some live charts. So they're very easy to identify trends. The Heikin Ashi really helps you see a trend and be able to stick with a trend and stay with a trend. How many of you have a problem? How many people have a problem with the idea of the stock moves, getting nervous, bailing out of a trade way too soon, and then the stock just keeps moving on up? Okay, you just keep. Yeah, no, we jump out too early, right? We get nervous about the price action. We get nervous about that jumpy price action. Well, Heikin Ashi smooths that out, and it can help you stay in that trend much, much longer. Um, the other thing that's really nice about them is it develops the same price action or the same price patterns, the same price signals that we all know, that we've studied for years in candlestick charting and things. The patterns are the same. The trends, you can find wedge patterns. You can find flags. You can find all the basic patterns that we normally see. Rounded bottom breakouts and pop out of the box patterns and all of those things are all still there in the Heikin Ashi candle, but they're smoothed out. As a matter of fact, the consolidations are so clearly visible in a Heikin Ashi candle. It it actually clears the picture up quite a bit. It's like somebody washed the window, and you get that nice clear picture of the price action. They are effective on all time frames. However, you do have to be a little bit careful with how you trade them, because one of the major cons is they completely hide gaps. You can't see a gap in a Heikin Ashi candle. They hide it completely. So you have to consider that when you put together some kind of a plan or how you might want to use a Heikin Ashi chart to help you with your trading. They also don't show the exact price open or the price close. Okay, because of the way they're calculated on an average, so that you don't get the exact price open or the exact price close of a period. And that really messes up people when you're used to trading normal candlesticks all the time. And I'll talk about here in just a second how a lot of people will use Heikin Ashi more as an indicator than than a chart to trade. Okay, and they have much slower reaction time. Because they are an average of 2 periods, it makes it slows that average down, slows that price action down considerably. Okay. Very little effect. You put indicators herald on a Heikin Ashi chart, and it's very, very similar. Very similar. Remember, if you use a moving average or something like that, a moving average is, it just takes one point in time, plots it on the chart, and goes back, let's say it's a 50-day moving average, goes back 50 days. And I mean, they're very, very similar. There's very little effect. However, I will give you an adjustment to one indicator I use for longer term time frames. If you want to use Heikin Ashi, it just tightens things up a little bit. So the Heikin Ashi definitely has its pros and it definitely has its cons. So I don't want anybody to think this is the next best thing since sliced bread, and this is the thing that's going to save you in your trading. I threw this in here just so everyone can kind of get an idea how the candles are calculated. I don't want to spend a whole lot of time here. The HA that I haven't is Heikin Ashi open, Heikin Ashi high, Heikin Ashi low, Heikin Ashi close. So you can see the Heikin Ashi open of the previous bar plus the close of the previous bar divided by 2. That's how they calculate the Heikin Ashi open. The Heikin Ashi close is the open plus the high, the low, the close divided by 4. Okay, so they're there is a little bit of complication in how they're calculated, and that's why when you think about Heikin Ashi, you have to realize that when you do these kind of averaging calculations, the exact price high, the exact price low, things like that will not be displayed on that chart. Okay, so you have to think about that if you put together some kind of a plan to use it for trading or as an indicator. So Heikin Ashi is an indicator. Because they are averaged, one of the things that traders tend to do a lot with Heikin Ashi is to use it as a trending indicator. We all know that regular candlestick charts can get pretty jumpy, can get pretty wacky at times, right? All over the place, and make you nervous, particularly if you're watching them because they jump around so much. But what they will do is they will use an Heikin Ashi chart along with a standard candlestick chart to help them smooth out or to relax a little bit in that price action, to stay with the trend longer. So they use that to help them see the trend. And I'll tell you, I'll show you how I've been using that and making some really good money here with it. And utilizing options and that kind of thing on how I've been using it to pick up some really quick type trades that are great. So if we kind of keep an eye on that and just remember when you're looking at a Heikin Ashi, remember it's an average, okay? Don't look at it the same way as you would a regular candlestick chart, okay? Now, the smooth trends eliminate all that noise. So one of the things that you hear people talk about a lot is that the Heikin Ashi helps reduce emotion. Now, I think a lot of us as traders would agree that we have one of our major obstacles that we have to deal with trading our own money is the emotion in that trade. Well, Heikin Ashi, they get a lot of acclaim, I guess, because it helps reduce that emotion. Because of that average and the way it smooths out that chart, it reduces that emotional response, and you can stay with the trade longer. So I see there's a question that keeps coming through here about, and all in caps, trying to draw attention to a flaw. And I've said that at the beginning. There are pros and there are cons of the Heikin Ashi candle. You have to build a plan on how to do that. Okay, and I'll show you what I've been doing. It's actually very, very easy. It's not hard to do. You just have to think about how they're calculated and put together something that works for you in a trade, okay? So here are two. This is the exact same chart. One set up as a Heikin Ashi, and it's probably a few days difference in the actual candles, but you can see in the Heikin Ashi you've got this real smoothing effect. See how the candles are very, very, there's no gaps, they're very consistent, very smooth in their price action in comparison to the standard candlestick chart. That standard candlestick chart, and by the way, this is a daily chart. That standard candlestick chart has a lot more gaps, a lot more opens. Those wicks and tails kind of start to confuse folks and get in the way. You can also see this in this little chart right here, this choppy area right in here. See how it's kind of all over the place? But how the Heikin Ashi turns that into more of a cleaner consolidation range, where we can watch a chart without so much emotion and look for the next entry into the trade. Okay. So, it absolutely is. I said that right at the beginning. Heikin Ashi, one of the major cons in Heikin Ashi is it doesn't show you the high, the actual high or the actual low of a candle because it's a price average. Okay? It's a price average. All right? But you can make that work for you. Remember, you don't have to trade necessarily the Heikin Ashi candle itself or the chart itself. Use it as an indicator of trend. Okay? So, how do you read a Heikin Ashi candle? They're actually very, very simple. Actually, really less complicated than a standard candlestick candle. If you look at a Heikin Ashi candle, you'll often see no lower tail. If there's no lower tail on a candle, so we have no tail, no lower shadow, the buyers are dominating that price action and a strong uptrend is indicated. So when we flip back to this chart that we were just looking at and looking at it on Heikin Ashi, this chart, you can see these candles right here, there's no tail on those candles. A strong uptrend is indicated. So we can just manage our trade a lot easier than if this same time period over here, look at how jumpy that is. Nice trend, but you can see that the candles are giving us a whole lot of back and forth, a whole lot of not sure, uncertainty, right? Where the Heikin Ashi smooths that out and indicates that nice strong uptrend. Okay? Now, if you're looking at a chart with the black candles, or if you use red candles, I highly recommend white and black candles on white background for everyone. I'll show you guys that here in just a little bit. I call it the naked chart. It's far easier to read. You do your own research on this, but you're going to find white and black on a white background candle or chart. You're going to be able to see price patterns, I mean, tremendously better. Anyone in Right Way Options that has learned that, just post in there, why. That how going to a simple naked chart has improved your trading just because you can see the price patterns so much easier. Okay? So, if you see a dark candle or your down candle, and that down candle is there's no upper. Oops, that shouldn't have been a tail there. There's a mistake there. No upper shadow. It should be a wick. Sorry, a wick. If there's no wick, sellers dominate and strong downtrend indicated. Okay. And then if we look at candles in the Heikin Ashi where we have wicks and tails, little price bodies, what we would normally call a spinning top or doji price action in a normal candlestick. If you see that kind of candle, it's a weakening, possible a weakening trend, a possible consolidation beginning or in consolidation, or a possible trend reversal. Yes, white and black candles on a white background. I'll show you, we're going to jump to live charts here in just a second, Bruce, and I'll show you what I'm talking about. So when you look at a Heikin Ashi chart, what we're looking for in those is we're looking for these nice little places to enter and exit trades. So you can see when we have these no wicks, or excuse me, tails on these, all wicks, no tails during these periods, we are indicated in a strong uptrend. Nice price action moves. And we can enter those trades the same way we enter on any other trade. You guys know that I love trading a pattern that I call pop out of the box. And all it is a nice tight consolidation. When I get that nice tight consolidation like that, by the way, this is key for anyone who's never listened to one of my presentations before. This is key. I'm only going to be looking at charts that are currently in a trend. If a stock is not trending, I'm not going to be looking at it to begin with. So if I'm looking at a stock that's in an uptrend, okay, overall the uptrend is there, and I see a stock after moving up slip into a consolidation, a nice tight consolidation, what I'm going to do is place an alert above that consolidation. And I'm going to wait. I'm going to wait, literally wait for the trade to come to me. Now with the Heikin Ashi, it's really simple to see those nice tight consolidations, or what they call transitions, possible transitions, where the stock could fail or where the stock could continue its trend. Okay, so in that tight little consolidation, all I do is place a trade alert, let the alert bring me into the trade. Stock pops up there, lets me into the trade. Now, the question that has been running through there in the caps is, well, what do you do with your stop? How do you protect yourself? Well, the same thing as we always do in all of our trading. If we have a nice tight pattern here like this, wouldn't that tell you that there's, at least at this point while it's consolidating, there's no buyers above that point? But it also tells us that there's no sellers below this level. So if the stock pops and gets us into the trade up here, all we have to do is set our stop loss below that and then manage our stop loss in the trade. We can take very, very low risk entries into positions. And you can see it's very consistent. You have the same pattern right here. Pops through, okay? Set your stop loss below those levels. Pops through, set your stop loss below those levels. You don't have to get all concerned about that. Everybody gets so wound up in this whole intraday stuff and chasing everything around and being so concerned about the live price data and the fact that it's wiggling around. You're wasting your time doing that. You will never be successful as a swing trader if you're overly focused on that noise in the market. You'll never hold a trade long enough to make really, really good money in it. You have to put that out of your head and just follow the chart. Now, unless you're a really fast day trader, and I'll show you how Heikin Ashi can help you even as a day trader in those live charts. And it smooths it out. Again, you're not watching all of that price fluctuation back and forth and being all wigged out because, somebody says there's flaws in this. There are. Not one of these candles showed the exact price open or the exact price close. That didn't change the fact that we were in a nice trend and able to trade that position very effectively. Okay, so let's go ahead and the Heikin Ashi down. When Heikin Ashi comes out of these tight consolidation or these little transition periods, okay, we place our entry into that trade below that box. And then our stop loss goes right above, a very low risk entry into a short trade. And you can see how consistent, how clean these are, and the ability to get into very low risk trades and be able to stick with a trend in a very clean and easy way to manage. They're very calming in a way on how they work, okay? So nothing fancy here. Now, I'm going to throw in an indicator here, and I know some of you may in here may have never seen the volatility stop indicator. Okay, if you're interested in the volatility stop indicator, I'm going to give you guys this right now. You can follow this link. You can follow this link, and you can download my ebook. It's called Consistent Profits, Strategy for Consistent Profits Using the Volatility Stop. Okay. Within the ebook, there are links on how to set it up in TC2000 charts. There's also links with the entire code of how to set it up in Thinkorswim charts. And you would have to reverse engineer it for any other thing. Now, a lot of folks will look at this, and the first thing they do is they say this is a parabolic SAR indicator, and it is not. It is an average true range indicator. The other thing about this, and I want to say this very, very clearly, the volatility stop indicator is not a buy-sell indicator. It doesn't tell you when to buy. It doesn't tell you when to sell. The volatility stop indicator, the way I've put it together, is to show you support, resistance, and trend. That's it. Support, resistance, and trend. Price action, price, is how you enter and exit trades. You still have to follow the chart. You still have to follow price action. No, Kat, I do not have it for TradeStation. I do understand that we do have a member that has it for TradeStation, but I don't have access to that right now. But it can be written for TradeStation. Okay, so it's actually a very simple indicator. Now, the volatility stop, you can see the volatility stop tells us where price support is. So if we have one of these nice tight, first off, the stock is trending. Stock is trending. Okay. If we have one of these nice tight consolidation periods in here, where we have a very tight level in here, notice how that tight level holds just above the volatility stop, the green volatility stop that shows us price support. And all that is if you just take this line and stretch it all the way back here, it's showing us the price support of this top right here. We're setting on top of that price support, and it's just giving us that nice green signal. Hey, we're above support here. We have a potential of a trend continuation move getting ready to occur. When it pops out of that box and triggers this trade, notice how easily it is to follow that trade. And somebody asked about stop losses. All you have to do is adjust your stop loss at the end of every period. So if this is a daily chart, at the end of every period, adjust your stop loss until you get stopped out. Now, one other thing that I would suggest in there, and this is something that you'll pick up if you watch some of my other videos, you should have more of a plan than just following it up with a stop loss. So for example, if I enter a trade like this, I can guarantee you we move up into here and I'm probably taking some profits out of the trade. I'm scaling out. I might take 50% of the trade off. Okay, because I'm reducing my risk in case we get that big gap down or that big reversal or something like that. Okay, so what I do is I'm always putting together a plan to exit the trade as it's going up, as it's making money. Okay, scale that trade out, put some money in the bank, and then let the rest of the trade work. I can relax a little bit on that. So you can see how these trades easily lay themselves out and how the volatility stop really complements with the Heikin Ashi candle to smooth out that trend and make it a little bit clearer and easier to see. Okay, it literally gives you the ability, had you entered clear back here on this side of the chart, following the volatility stop, to stay in that trade for what could be months. just continuing to make money on a nice, strong trend, because it smooths it out and eases your mind. You don't get all that whipping back and forth that you do in a normal candlestick chart. Okay? So let's just jump right into some live charts here, and let's take a look at how Heikin Ashi how I actually use it, and how it can might be able to be something that helps you in your trading. Now, this is a standard candlestick chart. Okay, standard diamonds candlestick chart. I'm going to throw the volatility stop on that standard diamonds candlestick chart. Okay. Now the volatility stop, you see, as long as we're staying above the green, it's showing us price support, opportunities that we can either enter new trades or stay in a trade. Okay. But if I take that same chart and I put it on a Heikin Ashi, does anyone think that they would be much easier? It would be easier for them to stay in this trend, easier for them to follow that trend versus the hopping and popping and jumping around that we see in this chart. So by using that Heikin Ashi on the daily, even with the volatility stop, notice how that cleans that chart up dramatically. Notice how we see very, very clearly these transition point periods where we have wicks and tails on all of these candles. That's a transition period. That's a period where you want to be watchful of either more of a breakdown or a pop up. It's that consolidation where buyers and sellers are trying to decide what the right price is. So we get all those wicks and tails in there. We know there's no trade here, but we know that we may want to be watching this for entry into the position if the pattern starts to develop. We can see very clearly when we're downtrending right here, no wicks on those candles all the way down to there. That's the last one. That's where we go into that transition. So if you're actually short that trade, how easy is it to follow that trade down, scaling out, taking some profits on the way down? Pretty simple, right? And it just smooths out that trend. Now I'm going to show you a chart. This is one of those unfair things. Because, it's easy to cherry pick charts. Okay. Take a look at these trends here in Microsoft. And this is a daily chart. Okay. And I'm going to show you on the daily chart that Microsoft has been trending for a long time. Okay. So what we're looking for is we're looking for those entry signals into Microsoft. Actually, relatively inexpensive trade if you trade it with options, and really good, clear entry signals. Now, what I always want to do is respect price support, resistance, and trend. Okay, so when I see a chart like this, I'm always going to look for the low risk entry position. So for example, in this chart, a great low risk entry position is right in here. We first get our move up. I don't worry, whoops, this thing changed tools on me. I don't necessarily want to chase this move out of this transition period, but we break above that price support. We stay above the volatility stop, and notice how tightly this entry comes to where our stop loss needs to be. So in this trade, our stop loss would need to be right underneath here, and we could pick up that nice entry signal right here to maybe take this trade right on up. Now you can see this one ended up with a little bit more of a transition period, but it just kept moving higher in that transition. But that's where I want to enter long trades. I want to enter long trades above the volatility stop, and I want to enter those trades that are very, very close to my exit, where I would be wrong. So I can plan a trade that has low risk in the position. Now, here's the unfair part. I'm going to show you this chart on a weekly with the same price action, showing a Heikin Ashi and the volatility stop. You literally, with a weekly entry into this trade, see this tight consolidation right down here? Extremely tight. Entered that trade when it popped up over the top of that. Set your stop loss underneath here, and you could have been in that trade since mid-2016. Still, and just getting stopped out over here. In that trade that long, using that Heikin Ashi. So does it work for longer term traders, folks that want to do more of a passive investing, where they get into a trade, get into a nice trend, and have the ability to stick with that? And by the way, this isn't odd. This happens all the time. Take a look at a stock we traded the heck out of in right way options, SQ. Look at these trends. These are happening right now all around us. But the Heikin Ashi will help you identify those longer term trends and be able to manage those trades longer. Manage those positions to stay in longer. Now, if you decide to swing trade this, is the trend still great? Well, there's that great entry, low risk entry point right in here. And you can see that went from, well, let's go toward the end of June here. That stop out was a month later. Incredible, right? Being able to stay, and this is a daily chart, being able to stay with a trend that long without having to bounce yourself out, getting all nervous about the price action of the chart. Scale out, take some of your profits, reduce your risk in the trade to begin with, and then just set that stop loss and let the trade work. You never know how far it's going to go. Now, we all know we've had just an ugly couple of weeks here in the market. Can you make money with this on a short term? What about you guys that want to take short-term trades? Now, remember, each one of these candles, okay, is an average of the day before. Okay, so how do you get a little bit quicker entry into that? What would be a good way to compromise that? Well, what I like to do is I like to go, I'm more of a swing trader. I'm not really a day trader. I do some day trades, but I'm really much more of a swing trader, position trader. I like the lifestyle of a trader. I like to be able to get up and walk away. Go do something else instead of sitting there like a, bump on a log staring at a chart. I like to have a life, basically. And so I look for ways to help me maintain that lifestyle that I want in my trading. So what if we turn this into a half-day chart? Basically a 4-hour chart. So a 4-hour chart is going to average each candle back to the last 4 hours. Okay, so now we have smoothed that out over a shorter time frame. We can catch those nice tight entries. See how clear that is? Look at that little consolidation right there. How beautiful that is. We can actually easily just set a price alert on our chart. Wait for the trade. Wait for the trade to come to us. It pops up through there. We set our stop loss underneath here, and then we just manage this every 4 hours, adjust your stop loss. And notice how we can stay in that trend because there's no tails on these candles. Just very smooth and consistent. So even with a 4-hour chart, you take that entry. Let's say you catch that first pop right here. That's on the 20th, and you're still in this trade. Notice that we don't even get a black candle until here, that transition period. So until September 4th, you're in that trade. You don't actually get stopped out. Now, I would tell you honestly, there's no way I would probably be hanging. If I had this much profit in a trade, I'd be taking the profit. But if you just blindly follow the volatility stop, you don't get stopped out until all the way over here. So you're not day trading, but you're getting early entries. Okay. Tick charts. Do I have an opinion on tick charts? I traded futures, okay, for several years, and day traded futures. And I made money doing it, quite a bit of money. But I found I didn't like it. I would be trading and my wife would come in and say something and I would bark at my wife, can't you see him, because you can't take your eyes off the chart. So if you're using a very quick tick chart, and I just hated it. I hated that feeling. I hated not being able to look away and do something I need to do or take care of something because I cannot do anything other than focus on that one chart whipping around in a tick chart. So my opinion is, for me, I don't like them. I can trade them. I hate them. Because I didn't become a trader to lose my lifestyle. I didn't become a trader to set myself in front of a computer all day long doing nothing but watching a candle wiggle around. And I don't think many people come to trading with that idea. To tell you the truth, if you really evaluate yourself, you want to have some freedom. You want to have a lifestyle. So think about that when you plan. I know a lot of folks just tend to gravitate. They're not making money in swing charts. They're not making money as a position trader. And so they think if they just go faster and faster and faster, somehow that will work out for them to make money. But what happens? The faster and faster you go in your trading, if you haven't solved your trading problems to be able to swing trade effectively or position trade effectively, all that going to the faster chart's going to do for you is help you lose your money faster. Okay? So you have to solve your problems with trading up front. If you can make money, consistently make money on a fast chart, you can consistently make money in a swing trade chart. Because it's all the same chart. It's all the same price action. It's all the same patterns. Everything is the same. But for some reason, everyone believes if we go to the faster and faster time frame, it's going to resolve their trading problems, and it doesn't. It's the same thing with options. Everybody thinks, well, I can use less money to trade options. If I just switch over to options, that'll solve my problem in my trading. No, it'll make it worse. If you don't settle down to a set of rules and a guideline and a process on how you trade, it will make the loss of your money just accelerate. You have to solve your trading problems and issues. And I think most people, once they do that and realize they can make great money trading charts like this, what do you need anything else? Let me give you an example. My partner, Rick Sadler, he runs Hit and Run Candlesticks. Rick has traded for 30 years, okay? He has never, ever traded an option until last year. The first of the year. I started teaching him how to trade just directional calls and puts. Okay? Directional calls and puts. That's all he does. No spreads, no nothing fancy. Okay? You can go on the website and see his results, because he posts his statement every month on the website for everyone to see. Okay? And so far this year, he's reached a 300% return on his account. Okay? Here's my partner, Rick Sadler. Hit and Run Candlesticks website. Okay? My name's Doug Campbell. I run Right Way Options. We're combined as a team on the same website. Okay? All he's done is trade straight directional calls and straight directional puts. That's all. And he's made a 300% return this year in trading. Now, guys, you don't have to get overly fancy. And if you can make a 300% return, if you can make a 50% return, trading simple charts like this. And by the way, Rick only trades daily charts. He trades no intraday charts. Only daily charts. So if you could have the lifestyle you want, making the kind of money you want to make, just doing simple swing trading where you can get up and walk away, take your wife to lunch, go walk the dog, go work out, go do whatever it is that you want to do during the day, and everything is under control in your trading, who wouldn't choose that lifestyle instead of staring and, putting themselves in front of a wall of monitors and staring at those all day long? So keep it simple. Keep it simple, and your trading will improve. Okay? Now, let me show you this. I do use balance of power, BOP, for very specific things. Okay? And I don't have time to talk about that here today, but I use it for very specific things. So what about intraday charts? What if you wanted to trade something really quick? And I've been doing that a little bit lately, where I've been taking really quick trades because of the volatility of the market. Okay? What if we use this Heikin Ashi chart, and what if we looked at an even shorter time frame? What if we looked at a 15-minute chart? Can we make money with a Heikin Ashi chart on 15-minute? Okay? Well, here's that breakdown. There's the break, the rally back to resistance. Here's our failure candle that we failed out of this support area. Take that short, run that down. You take a 15-minute trade, 15-minute chart trade, enter that when it breaks that support underneath the volatility stop, and follow this down. You've got a 30-40% winner using an option, just like that. It's very, very clean. It's very, very easy to trade. Same thing is true in uptrends. Now, we haven't been in an uptrend for a while here, obviously, but if we are uptrending, in the periods that we're uptrending, take these nice little tight consolidations, place an entry in here. Notice how you can enter, set your stop, and let that trade work. Can you do it on a 15-minute chart? Absolutely. There's nothing fancy or special or anything about the Heikin Ashi. In fact, it smooths it out. It helps us stay in that trend a little bit longer. So how do I use these? Well, what I've started doing, I have an actual setup in my TC2000. I can't show it to you because I'd need to show you the entire screen, and that really slows down the response time and I don't want to reset the screen here in the middle of a webinar. It slows down Obnovia quite a bit. So what do? Well, what I do is, now I personally like the slower trades, okay, more than anything else. So I'm using charts like I might set my Heikin Ashi, let's say, just for giggles, I'm going to set my Heikin Ashi here to an hourly chart, okay? And then I watch my normal candlestick chart. And I'm looking for those normal candlestick charts to show me patterns or breakdowns or breakouts or something like that. Excuse me. And then I look over at the Heikin Ashi and I look and see if there's a really good setup coming. So if I wanted to make that quick trade, you can see any of these consolidation breaks to the downside were tradable very easily. Enter those trades and just follow that trade down. Very, very simple. And you can see at the close of Friday, we had a setup trying to produce an entry with a stop very close for a long trade in that hourly chart. So I use a combination of the both. I use it to help me see the trend. Now I also use it to look at the longer term trends. If I can find those stocks reversing a downtrend, trying to put in those longer term trends, I might be back on a daily here and finding a chart, finding a chart that's doing this in a trend. Okay, and so all I do is I wait for that entry signal to occur. I do not anticipate an entry signal. This is really key, guys. I don't try to predict the entry. I simply make the chart come to me. Okay. Karen, when you get these, when you're talking long tails, like something like this, or long wicks, don't even, you don't have to even worry about that. Just stay with the trend. See, one of the things that messes up so many people in their trading is they're micromanaging everything. They're never giving themselves an opportunity to let the trade work to make money. Hey, by the way, guys, I will not be answering private messages. I just don't have the time while I'm doing this. I can't do all of that. So does that make sense? We get so tied up in all this micromanagement of a position that we never give ourselves an opportunity to make any money. I mean, think about it. If you're looking at your account and what you've been doing, trying to micromanage everything, if your account's not growing, could you make an assessment that that doesn't work? Wouldn't it be about time to fess up to the fact that doesn't work? Okay? Look at your account. It's not working. So we have to fess up to that fact and try something a little bit different. When you get those long wicks and tails and things that show up in here, you do have to watch the next open. You know, we get this long wick in here. We want to watch and make sure we get follow through. But if we've entered that trade like we're supposed to, this stock, enter through here, and then just let that trade work, we're okay. right? Elizabeth, I don't know what you're talking about. The last time I plugged it into TOS, it worked perfectly. So I honestly don't know what you're talking about. Um, that script, we'll have to check if something has changed. But to my knowledge, that script has worked. A lot of people are using it. So I don't know what would be causing that issue. I really don't. Um, because we've got a lot of folks using it, and it's worked perfectly, working perfectly. And thanks to one of our members, Steve Combs, who actually wrote the code for that. Um, it's just working perfectly. So we can take any price pattern, we can break it down however we choose to. We can decide. Remember, we have to always remember that these are an average. This candle here is averaged with this candle here. This candle here is averaged with this candle here. And so we have to always remember that when we're thinking about trading these. So if you want to get more of a smoothed out look without having to wait quite so long for the trade, again, make it a 4-hour chart. Half a day. Make it a 4-hour chart and look for your entries. Compare that to your daily chart. Look for those trades and then follow those positions along. Okay? You know, Al, it's going to take practice. What you're going to do when you look at a chart, when you look at a standard candlestick chart, I mean, we all do this. We do this every day, right? We look at a standard candlestick chart. We know what we like in a chart. We know the patterns that we like. Well, if we see a pattern in here and then we're looking for an early setup or an early entry or a way to smooth out that trade, all we have to do is look over at the Heikin Ashi. I mean, it's no big trick. Just look at the Heikin Ashi and say, hey, I can catch an entry here with this 4-hour. Maybe catch that entry and just follow these trends. So, you know, step one is, if you're going to use a regular candlestick chart, is find a chart you like. Find a chart that makes sense. Find a chart that's trending. Find a chart that's doing something that you like. I brought up a chart on Friday. Go-Go. Go-Go is a rounded bottom breakout type pattern. Notice on this daily regular price action chart, we have an inverted head and shoulders pattern forming here. You can see I've placed an alert on this chart right here. I literally make trades come to me. I don't chase a trade. I don't anticipate a trade. I make the trade come to me. And I also recognize, because I've drawn up this chart, that this is the current trend. This just broke out. This is proving that it can hold this support. But it may require that this stock move all the way back over to trend before it goes. Just like it did over here. Look at that long consolidation. It may have to move over there before it can move, because stocks like to come back to their trend. So All I have to do is wait for this trade to come to me. Now, if I like this chart, could I throw this chart on a 4-hour Heikin Ashi and look for a trade? You know, absolutely. What would be different about taking this chart right here and setting an alert? Look at the nice tight consolidation we've got going on here in this price action. Why couldn't I just set an alert right through here? Whoops, a little high there. And say, I want the next price action to pop above that area right there. We're holding above the volatility stop. We're holding a trend. We see that on the daily chart. We're in a trend. We're holding that trend. So on the 4-hour Heikin Ashi, we're holding above the volatility stop. Now just set a place where you would want to enter that trade and have that alert you to the entry into that position. Okay. Al, anytime you look at two different charting packages at the same time, you're looking at two different charting packages. The way each company does their calculations of everything could be slightly different. That's going to change your volatility stop. So my recommendation to that is just use one charting platform. That's all. I mean, just use your own. I mean, pick one. By the way, for anyone listening, I think TC2000 is probably the best charting package out there. Bar none, when it comes to charts, it's one of the best. I have, and it's cheap. I said something the other day that if they doubled the price of TC2000, I would pay it. Because I can point directly to TC2000 for the profits that I make, or because I can get to those charts very quickly and identify those price patterns very fast. So if you guys are looking for a charting platform or anything like that are here listening, I did a class on TC2000 and they gave me a coupon. So you can get a full year of their gold package on TC2000 for $274. Now I got to, if you can't afford $274 for a good set of charts for the proper tools to trade with, then you're really in the wrong business. How many folks in here use TC2000 that would be willing to say TC2000 has increased or helped them be better traders because of the quickness and the ability to get to charts? It is a fantastic tool. So if you're looking for a good charting package, don't care whether, I mean, if you have one, perfect, stay with it, don't change. But take a look at it because it's just an outstanding piece of software. Just plain works. Okay, follow that link, you get $25 discount. It's more than I ever got when I bought it. Eva, I don't chart options. I chart the stock. An option moves based on the price of the stock, not the other way around. So I chart the stock and I plan my trades based on the stock trade. Can I chart options on here? Yes. Do I want to? No. In fact, I've never found it to be useful at all to chart an option because it's going to move based on the price action of the stock. So I plan all of my trades based on the price action of the stock itself and utilize options to leverage my position into those trades. And by the way, you know, in the right way options, we do this stuff all the time. Okay, it's this stuff isn't heavy lifting. Okay, it's just simply settling down into a plan and being disciplined. You know, it's like anything. If you don't have a plan, if you don't know where you're going, how do you ever intend to get there? So many people come to trading with the idea that they can just wing it. That's never going to work, you guys. I hate to tell you that. It's not going to work. You have to treat your trading as a business. You have to have a logical process. You have to follow that process every single time you trade. I don't try to trade every pattern in the market. I don't try to trade every style of trading in the market. I don't even want to. I pick a few. And honestly, I trade like 2 patterns, guys. And this is no joke. I trade like 2 patterns. And I've made a career out of that. I'll give them to you right now. Stock is trending. Number 1, stock has to be trending. Why do I want a trending stock? Well, if the stock's not trending, I'm just guessing. I'm gambling. I want proof that the stock wants to go up or go down. I want proof. Until I get that proof, I'm not interested. So where does a stock begin to trend? Okay, a stock comes out of a bottom like it did right here, comes out of this bottom. It rallies up. What everybody tries to do, I don't know why this happens. Everybody tries to pick the bottom, thinking that, well, that's the place to make the trade. How many times have you tried to pick the bottom and end up finding out that the next move down was a leg down? So I don't do that. I wait for the stock to break downtrends, hold the price support, and then show me those buy signals. And then I just follow the trend. It's way easier. And so the patterns that I trade, very, very simple. Stock has to be trending. I look for a stock that's confirmed the trend. I look for the next entry into that trade. The 2 patterns I trade most of the time are when a stock moves up and consolidates over to its trend, and I look for the entry. The next one, stock moves up and it pulls back toward its trend, and I look for the entry. That's it, guys. I've made a career out of trading just like that. Never trying to pick a bottom, not trying to pick a top. No prediction, no gambling. Just wait for the trade. Every time. Doesn't matter any time frame. I do it over and over and over and over. Same thing in a downtrend. I wait for the entry. I make the chart prove to me stock's going down. It falls, rallies back, confirms the downtrend right here. So I'm looking for those entries on those rally backups where I get a failure to move it on down, or I'm looking for those consolidations that fail. I do. Mike, I posted it. Here, I'll post it again for you. That's how I trade. And that's all I really do. And it doesn't matter what time frame, whether it's a weekly, daily, intraday, it's the same thing. I repeat it over and over and over. And the other thing that I think is extremely important is the process with which you trade, meaning the rules, the guidelines that you trade with under, okay, that keep you disciplined to a trade. You must have a set of rules and you must be disciplined if you're going to be successful in trading. If you're asking me best option broker, it all depends on you as a trader, Mark. I think for the vast majority of people, they're going to find Thinkorswim. TD Ameritrade with the Thinkorswim platform has been one of the best and continues to be one of the best out there. Now, we are actually, if you're more of a, have a little bit more experience, a little bit more of a professional look that you're looking for, a slimmed down version, really quick kind of thing, I'm actually transitioning to platforms called TradeHawk. It's through a broker called Tradier. Now, they don't have all the fancy bells and whistles or anything like that that Thinkorswim does, but the commissions are what I like. The commissions are what I like. If you guys have never heard of TradeHawk, you might want to go check it out. Just search mytradehawk.com. If you're a stock trader only, you guys will find this hard to believe. But it's $19 a month, unlimited stock trading. Your maximum commission is $19 a month, no matter how many stocks you trade, no matter how much you trade, it's $19 a month. Yeah, I've been using it for a while, Janice. I just haven't started. I'm still waiting. We're doing testing of the new orders and stuff like that in it that we've asked them to do. That's one of the other things. They're a very hungry platform. I have direct contact with them. So does Rick, and they're building tools and stuff for us. So if you're looking for something like that, awesome platform. And like I said, for stock trade only, $19 a month. If you follow that link that Donna just posted, Tradier, there with Right Way Options, if you follow that link, there's actually, we negotiated a special price. So if you want unlimited stock and option trading, okay, it's $150. I think it's $159 a month. So essentially what they say is you're paying for your platform. You're paying for the trading platform. That's the maximum you'll ever pay, no matter how many trades you make. Interactive Broker does have great option commissions. There's no doubt about it, Tim, but they have one of the worst records for customer service, and their platform is pathetic. It's the most cumbersome, worthless piece of software I've ever seen, and they don't support it, and they don't help you, and if you run into trouble, well, just good luck. They're terrible. So if price is the only thing that matters, Interactive Brokers would be great for you. But if you want something that has really good customer service and price as well, it consistently ranks as one of the worst out there. So certainly nothing for the newbie option trader. Tasty Trade, good prices. Tom Sosnoff is always very innovative. He's the guy who created Thinkorswim. Tom Sosnoff has a really great platform over there. Commissions are good, really good. It's a very graphic interface. It's really kind of designed more with the millennials in mind, getting more of the millennials to trade with that more of a graphic interface. But there's nothing wrong with that as well either. It's a good broker. Yeah, Tastyworks. Tastyworks is the brokerage. So back here to these Heikin Ashi. Does anyone see how these could be helpful to you? Let's take a look at, clearly we've had a lot of selling going on. Let's look at the Qs. And let's say we wanted to trade the Qs with a Heikin Ashi. This is a 4-hour chart. Do you guys see any good entries here for those short trades? I mean, holy cow, right? How easy is that to get in and follow and stay in that trade? What if this is a 4-hour, what if we went to an hourly chart? Could we make trades out of that pretty easy as well? I mean, my goodness. It's so simple and easy to follow. We know the market's bearish. Okay? Don't try to predict the bearish market necessarily. Just wait for the trade to set up and then follow the trade. How about if you like to trade, something that is inverse of the market. Let's say we looked at VXX. VXX is the volatility, and you wanted to buy some volatility protection in the market, and you pick VXX to trade volatility. Can you trade that with a Heikin Ashi? I mean, holy moly. What beautiful price action that is to be able to trade. Smooths it out. You don't have to watch that wiggle around all the time. You can get in the trade, set the stop, manage that trade by scaling out as you start making money, and then let the trade work. It's one of the easiest things that I know of to smooth out a trend. And you throw in that volatility stop, and doesn't that volatility stop just kind of enhance the Heikin Ashi? It makes it clear, right? Am I on the right side of this trade or the wrong side of this trade? It's pretty simple, right? Are you asking me to predict that, Harry? I'm not going to predict it. Let's look at the chart. It's still below the volatility stop. It just kicked over. Okay? My answer to that is no. What did I say? If I'm going to trade something long, it needs to be in a trend. Is this in a trend? Yeah, a downtrend. This is right at the place where this could fail. Just like it did right here. Where will this be a good chart? Pretty simple, right? The way I'm going to make this trade come to me is no matter what time frame I trade, it's got to break the downtrend, got to pull back or consolidate and hold and prove that it can hold above that downtrend. Show me buyers stepping in there, then I can trade it. Until then, I'm just taking a huge risk by buying it below the trend. So on this hourly chart, no way I'm going to take that trade. Yes, you could do that. You could shorten your time frame. But remember, when you shorten your time frame on a trade, you're back into that day trading thing. And if that's okay with you, that's fine. Just realize these are going to be a lot shorter moves, and you're going to have to stare at that chart. Okay? So in this, what do we have going on here? We have an uptrend on the 15-minute on the Qs. We're just now testing this resistance area up here. Okay? So what do we want? We want the low risk entry. So wait for the low risk entry. Whether that moves on up here and pulls back, or whether that consolidates here and gives us a signal. Wait for the trade. Don't chase a trade. Wait for a trade. Make the trade come to you. Same thing can be true in this downtrend. Don't try to chase this move down. Just wait for that to settle out, rally back up, test resistance, can't get through, set an entry trigger into your trade. When the stock falls below your entry trigger, enter that trade for that next move down. Okay. And also kind of keep in mind, Harry, this current market, massive volatility right now. Okay, so if you trade options, you're going to pay up big for options because the extrinsic value of those options is going to be higher based on the higher volatility. What happens when we have higher volatility? Lots of intraday whipsaws, right? We get stuff like this goes on. Stock pops up in the morning and runs up, turns all the way back down. Whips, lots of whips. Okay, so keep that in mind. And because of that whippy potential market that we have right now, options are going to be much more expensive because of that implied volatility. So think about that. If you buy an option, you could be exactly right on timing and direction, but catch a market whip and make it almost impossible for you to make the market or make money in that trade, no matter how perfect the signal is. So make sure you weigh all of your trading against the condition of the market. Understand what's going on in the market right now. Major shakeup, and it's going to take a long time for that to repair. If you need an example of that, just take a look at a standard chart. Let's go to the Dow. A standard chart of the February sell-off. Look at all the whipping around that occurred. There's one candle right in here. Let me blow that up just a little bit. Look at this whip. Move down, whip, whip, up, whip back down. This will be the process, most likely, of the sell-off that's currently happened. It's how all sell-offs go. There's always that repair period where we have to repair the psychology of the market. We have to start holding support levels. So expect a lot of whip in this market. Okay. Alrighty. Hey, hope everyone got something good out of this today. You get something good out of this. I hope you got some things figured out here. How to use Heikin Ashi. It's Heikin Ashi is not going to be a savior for you. Okay? Don't think it's going to solve all of your problems. If you don't have a good process, if you're not following a set of rules, it's not going to fix your problem. But if you use Heikin Ashi to help enhance what you see in a normal chart, be able to stay in those trades longer and move with the trend a little bit better, and if it helps you calm your nerves, then Heikin Ashi may be exactly what you're looking for to kind of smooth out that trading and give you back some of that lifestyle that you want in your trading. Okay? So thank you everyone for being here this morning, coming out here on a Saturday morning. I do appreciate that. By the way, we do Saturday morning e-learning sessions twice a month for Right Way Options. And then there's also e-learning sessions that we do for hit and run candlesticks every week. And every month, several of those are public that we share all of this information with the public. I want everyone to recognize the fact that I didn't try to sell you a thing here today. What I truly want to do and what Hit and Run Candlesticks wants to do, we want to help you be better traders. And if you find something that we do helpful, please think about taking a look at what we do. But I'm not here to sell you. I'm here to help you. I want you to be the best you can be as a trader. I see so many people losing money, so many people ready to give up. And don't give up on yourself. Just calm it down a little bit. Get a set of rules, a system put together, and then just be disciplined to that system and trade. Okay? If we can be of help to that, we'd love to help you. By the way, yes, thank you, Donna. Go over there to Right Way Options on YouTube. Click on that subscribe button, and then click on that little bell. This video will be there later this weekend, okay? Okay, it'll be there for you to rewatch if you're interested in looking at it again. I want to thank everyone for being here today. Slides for future reference, Bill. Just watch the videos. It'll be on YouTube and it'll be on the members page. So you can review them as much as you want. And it's free. So everyone have a great weekend. Take care of yourselves. Hey, yeah, I'm with you there, Bob. Go Huskers. We need a win, for crying out loud. Everyone take care of yourselves. Thank you for being here. You guys are the best. I do appreciate that. And how about we go out with a little tune here? It's one of the things we always do in Right Way Options. We're always listening to music. I'm feeling pretty grateful this morning, so I'm going to play a song by Home Free, a song that everyone knows. This is one of my favorite groups. If you've never listened to Home Free, they're a complete a cappella group. Look on YouTube. They're awesome. Everyone take care. Have a great weekend.